I was what I call a slave of money instead of a master of it. Like I was working for the money. I didn't have the money working for me because I did a lot of flips, buy, fix, and sell. I didn't have any rentals. I didn't have any cash flow. So a lot of quiet time came after the global financial crisis. My phone stopped ringing. I wasn't the guy anymore. So I had a lot of time for self reflection. And it was in those moments where I said, if I get the chance to rebuild again, I'm going to take this serious. I'm going to make this a business, and I'm going to learn more about how to turn this into a business so it can last, beyond me and hit the next generation.
Welcome to the Bricks and Banks podcast, where real estate meets real wealth. Whether you're building from the ground up or stacking your paper to the ceiling, Steph breaks down property power plays and money moves you can act on. From first-time buyers to seasoned investors, this podcast is your blueprint for financial freedom through real estate, business, and investment. Subscribe now. It's time to build your future. This is Bricks and Banks with Steph.
Before we dive into the conversation, I want to let you know that this episode is a paid partnership with BetterHelp. You know what's interesting? We all have these patterns in our lives, ways we react when we are stressed out, hurt, or disappointed. Maybe it's shutting people out, or walking yourself to exhaustion, or that voice in your head that says you're not good enough. For me, it's shutting people out. And here's the thing. We know these patterns aren't helping us. We can see them clearly, but breaking them, that's a complete different story. I used to think I could just power through on my own, that time would heal everything, but I just needed to be stronger. But the truth is, some cycles are nearly impossible to break alone. Not because we're weak, but because we're too close to see the full picture. That's why having outside support, real professional support, becomes a game changer. When you have someone trained to help you understand why these patterns exist and give you actual tools to help change them, everything shifts. You're not just surviving anymore, you're actually on your path to healing. That's why I'm partnering with BetterHelp today. BetterHelp is on a mission to make starting therapy easier. They'll connect you with a credentialed therapist who is trained to listen and give you helpful, unbiased advice, ensuring confidentiality throughout the process. You just get to fill out a questionnaire and you'll be matched with a therapist as soon as possible. And if that's not the right fit, don't fret. You can easily switch therapists anytime at no extra cost. To get started, head on to betterhelp.com/bricks and banks. That is betterhelp.com/bricks and banks to get 10% off your first month of therapy. I'll make sure to leave the link in the description so you can click and get right on. Breaking the cycle starts with one step, and this could be yours. Going to therapy is not a sign of weakness. No, it's a sign of strength. BetterHelp makes therapy simple with 10% off your first month of therapy to help you get started. Remember, you don't have to do this alone. A problem shared is a problem half solved. Hey everyone, welcome to another amazing episode of the Breaks and Banks podcast. I am your host, Stephanie, and today I have with me Fuquan Bilal. Fuquan is the founder and CEO of NNG Capital Fund. He has gone through a lot and he's here to share his story. He's here to share his life with us, and we are happy to have you on the pod today. Welcome, Fuquan, to the podcast. Yay.
Thank you for having me. Really appreciate it. I love
Your
love
story,
talking real estate or anything related to that. It's always good to share my journey.
yeah, that's the primary purpose of our podcast. Breaks. That's why you have Breaks and Banks. The real estate comes first, then we do business and investments later. So thank you for coming to share the core principles of our podcast with us. So one of your key stories that piqued my interest was when you went from $0 to $50 million, sorry, and you built that blueprints through real estate. You've built real estate, you've built wealth through real estate and impact. So I would love to hear your story. I know you've lived many different lives, so I know this session will just be you sharing a bit of that with me. So let's rewind the clock a bit. Take us back to the moment you realized that real estate wasn't just a hustle, for your life's mission. But before we go into that question in depth, I would appreciate if you can just introduce yourself, give a bit of background, your life growing up and how you got here.
Sure. Fuquan Bilal, CEO and fund manager of NNG Capital Fund. And
Yeah.
we're a real estate investment firm. We're based in the US, where I've been
Uh-huh.
investing the last 26 years. So I started my journey in real estate back in 1999. It's been a journey. And what I like about real estate is you never learn everything. You're always learning something.
Sure.
So to answer your question, I think that I got real serious was when I took the biggest loss, if I can,
Mm,
put it at that. That was probably somewhere around 2008 when the market crashed, the global
okay.
financial crisis happened. Before then, from 99 to 2008, I played the real estate game, but just in that sense, I played. I didn't take it serious. I was making a lot of
Mm,
money. I was a young kid. But when I got the reality handed to me when the market crashed and values dropped 50% and I lost, a
wow.
few $1 million of my own money, that's when I really started to pay attention to it and really took it as a business. So that kind of answers that question. When did I first started to like take it serious? A lot of people get involved and they do it part time. Some
Yeah,
people
okay.
make it their one thing and they jump in all the way. But if you have the capacity and the ability to stick with it, learn it, and hone your craft, it can be
Uh-huh.
very, very beneficial.
Yeah, and you're basically the blueprint of that life. So, but before we get into your life in real estate, how did you get here? Like, has it always been like in the family business, or you just stumbled upon real estate one day? What was your background and all that?
No, not family business. My background, I actually started off my first job from school was the telemarketing and sales. So I did that for years and transitioned into corporate. And then from there, I was actually shadowing a family member of mine and they were doing real estate and they were making some really big money. And I started to shadow them around, learn the business. My older brother was doing mortgages at the time. He was a loan officer. So, I had people in my family in real estate. I was like the everyday person who stuck on a job and need that biweekly paycheck. And there's nothing wrong with that, right? All of us add
Uh-huh.
value in some way to businesses or to other people's lives. But I just did not want to be the person putting all my time and effort building another company that I wasn't passionate about. I just did it just to pay my bills. And
Mm.
real estate gave me the ability to be passionate about something and want to learn more about it. So, I just went from there and took a leap of faith. And that's how it happened.
So, did you learn from your brother or someone else, like a friend, or you had a mentor at that
Yeah,
point?
so it was a cousin and a brother. So my brother
Okay.
actually he was involved doing loan officer work. So I learned that from him on how to like underwrite deals, how to evaluate deals, from that perspective. So that was something that I kind of learned from, my brother, how to pre-qualify people and get them approved. That was kind of something that, I paid attention to and kind of learned.
Amazing. And you've come from that
Welcome
background.
to
So were you doing that
welcome.
part time while working on your job, or did you just go full hand into it at that
No, I
level?
did it part-time while working on my job. Like everybody
Okay.
else, I kind of started off not sure this is what I want to do,
Mm,
dipping my toe in it, because my mindset wasn't there. I was talking earlier that, we kind of get stuck on what works, right? We say we
yeah.
have bills to pay, we have this to pay, we make all the excuses, but we don't look at um the flexibility of owning your own business or so 9 to 5 is the hours you work and then after 5 o'clock is for yourself, right? Or whatever
Five
shift you're
to nine.
working. You gotta find some time to start working on your own business. Unless
Mm,
you're not the type of person that want a business. Not everybody is business minded. Some people are just fine going to work and adding value that way. And there's nothing wrong with that. But for me, I just had this hunger inside of me where I wanted more than what was being offered to me. And that had a lot to do with my background and how I grew up. Think that growing up in an environment where you don't have much, which most people can relate to, right? So
yes.
that's kind of where I think my hunger came from, you know?
Yes. I like the way you put it, and I picked up something when you shared earlier when you when the financial crisis happened in 2008. That was when a
Yes.
lot of people lost money, but a lot of people also gained money then. And you were one of the people that turned that crisis into um, a good situation for you. So what made you lean in when others leaned out of real estate? And how did these early scars shape how you invested it? Because I know that you said that was one of your worst investment moments. You lost a lot of money.
Yeah, so the global financial crisis for me was a wake up call because before then I played the real estate game, like truly in a sense, just played. I didn't take it serious. And it wasn't until like most things in life, when you have that adversity hit you, you can either sit there and lay on your back and do nothing, or you can get up and you can fight. And I think from that moment on, it was like PTSD, right? Growing up in the low income area, not having everything, and a lot of us go through those struggles. But for me, going through the global financial crisis in '08, it was like that part of my life showed up again. And I was like, I can't, I have to do something. I can't live like this. So it was again getting up every day, fighting, putting myself in the right network, because before that, I didn't have the network because I was a young kid running and gunning, making a lot of money and not having the right resources and the right network. And at the time, I didn't feel as though I needed that because I was making a lot of money. I was what I call a slave of money instead of a master of it. Like I was working for the money. I didn't have the money working for me because I did a lot of flips, buy, fix, and sell. I didn't have any rentals. I didn't have any cash flow. So a lot of quiet time came after the global financial crisis. My phone stopped ringing. I wasn't the guy anymore. So I had a lot of time for self reflection. And it was in
Mm,
those moments where I said, you know, if I get the chance to rebuild again, I'm going to take this serious. I'm going to make this a business, and I'm going to learn more about how to turn this into a business so it can last, you know, beyond me and hit the next generation. And that's when I went on a searching journey. First, it was building my network, connecting with the right resources, right people, rebuilding my team of contractors. And it's through trial and error that you learn. So you never know everything. Even 26 years later in this journey, there's things I'm still learning about construction, about rehabbing, about lending, about how to
mm.
source deals, about how to become an acquisition specialist and find the best deals. So you never know it all.
Well, I love how you said building your network, because there's a popular saying that your network is your net worth. So for someone that is just as young as you were while starting out at the time and wants to leverage networks, what would you say are the top three things they should be doing right now in order to build and expanding the right network?
Yeah, it's really getting out and mingling, right? Going to events where you know that's going to be
Mm,
life changing. Surrounding yourself around people that are doing what you want to do and connecting with those individuals and asking questions, being prepared, going to construction sites, visiting projects they're doing. But when you're driving past a project, jump out of the car and introduce yourself to the contractor. I built a lot of relationships in the morning running, seeing contractors working on a house, whether it's a guy doing
wow.
painting, framing, siding, windows, roofing, getting their business cards, asking them what other projects they work on, traveling to those projects, looking at the quality of the work, and you know, or in Home Depot or you know any hardware place. I know you guys are in London, but any
Yeah.
like you know places, Lowe's, Home Depot. I don't know if they have them over there, but whatever they call them, go in there and
Yeah,
creating
they
those
do.
relationships, right? So yeah, creating those relationships and going there, it's kind of how I built my network of contractors, but business people, it was primarily going into those functions, you know, during the evening and making those connections. So I would definitely go to those meetup groups. I don't know if they have it over there, but people can go
Yeah.
to something called meetup.com, meetup.com,
Okay.
and you can search. There's a bunch of different things in there, hobbies, but I choose real estate, and they'll tell you within a 1 mile radius or 10 mile radius or however far you want to travel, events that's happening in your area where you can connect with people in person. And you just, you know, go to 2 or 3 of those events a month. They're practically free, and people are giving education, and you know, you can make those connections. Everything starts with education. So you could do it online, you can go in person,
Mm,
and you know pretty much from there. So those are the three things I mentioned, which is really focusing on building a network, attending those monthly events, and if you're trying to do real estate, you have to have some understanding of construction. So visiting construction sites, people who are buying, fixing, and selling, or have rentals, going to their
yeah.
properties, shadowing them for a day to see what they do.
Wow, that's really mind blowing, because You just give a very direct and simplistic approach to it. No more long jabs. No, you have to go somewhere. And I like how you put it, go into the construction sites, because we can't just close all the businesses at network events. We need these construction sites, people are actually closest to these investors. So if we know them, they can even give us a leap into where we need to be. So thank you so much for that hack, actually a life hack. So let's talk about your company a bit. What does Energy Capital do, and what's the business all about? Is it just real estate, or you do fund management as well?
Yeah, we just do real estate. We buy, fix, and sell luxury spec homes in Northern Jersey and in the
Mm.
Southeast. I'm actually at one of our properties now. I'm at a 120 unit apartment complex that we own. I'm in one of the offices in the back, but we do a impact project here where we buy affordable housing and we provide housing for low income seniors,
Interesting.
battered women and children, affordable rents. And the goal here is to add value. We come in and we take a property that's underperforming and get it up to the best standards, whether it's the quality renovations, whether it's quality staff, quality systems, processes, to generate a better profit than a previous owner. And, once you start doing that, it takes time. These bigger projects takes 3 to 5 to 7 years
Mm-hmm.
sometimes to get the cash flow to where you need it. Because most of the time rents are, 25 to 30% below market. And it takes time to get it to market to position it where it's profitable enough for you to be able to sell it and make the money.
Wow. And I know not everyone talks about Class B multifamily properties and luxury single family properties in the same breath. And this is what NNA Capital is doing. So, what's the story behind these specific lanes, and how are you pivoting them together in your
Diversity,
mission?
right? So it's diversification, right? We have the
Okay.
same two different verticals and the same
Mhm.
vehicle. So if the market shifts, we have cash flow from the multifamily. Right now in the US is
Okay.
impacted with a lot of operators defaulting on these loans. Interest rates increased. They didn't
Mhm.
finish their renovation plan that they had when they purchased the project. They got caught in the middle of an interest rate hike. So, it's a buyer's market now for multifamily. Now is the time to buy because a lot of operators are not able to survive the storm. But and that's one of the reasons why we have two verticals in our investment vehicle, because when one industry is having challenges, we still have, another vertical that
Mm.
will help continue to bring in revenue.
Nice. And one of your business approach, talked about it being long-term projects, and your cash flow can be tied up for 5 to 7 years on that project. So what do you look out for on a big deal? What are the instinctive green flags you follow? And what are the red flags would miss out if they're not trained on the job?
Yeah, so for multifamily, I would say again, the target is 3, 5, 7, right? So some people are in and out in 3 years. Most people hold on to 5 years because that's when you're going to realize the maximum value if it goes according to the plan you created when you first underwrote the deal. And usually that plan is
Mhm.
we're going to come in, we're going to monitor those expenses, we're going to get them down, we're going to add curb appeal, we're going to do quality renovations, we're going to increase rents as we go through the years. And at year 5, we should have enough rental increases that will generate more revenue to the property that will be able to create more value. And then we exit. Sometimes it takes 7 years to do it. Most people do it in three
Mhm.
years where they refinance, pull out money, pay off their investors, and they hold on to it. So there is cash flow coming in. When you first buy the deal, just depending on the type of deal you buy, but we usually try to target, if there's new deals, anything that's more than 90% occupancy, because you can see some sort of healthy cash flow. When your cap rate is basically higher than your interest rate, then there's cash flow, right? So we're buying
Mm.
at an 8 cap, and the banks are giving us a 6.5% interest rate. There's some cash flow.
Okay.
But if we're buying at an 8 cap and the bank is giving us a 10% interest rate, there's negative cash flow. And that's kind of where a lot of the operators are now because of the hike in the interest rate. So that's a
Mhm.
red flag. If you're buying and your cap rate is lower than your interest rate that you're going to get from the bank for your mortgage, then that's definitely a red flag because that's negative cash flow. So that's some things that you want to look at when you're buying those type of properties.
Okay, amazing. I like how you put it. And how do you basically calculate the cap rate? Do you do it by yourself, or you have a different company come to do that assessment for you?
No, so when you're doing an analysis, there's a
Mm,
few ways you can do it, right? So we're talking multifamily now.
yeah,
There's a
okay.
lot going into underwriting a deal, and that is physical inspection,
Mm-hmm.
looking at leases. Usually, you will have a property management company come in, third party, inspect all the units, help you out, and then you can either do your analysis in house or you can outsource it to a third party, and they'll run all the scenarios. They'll do all of that evaluation for you, present it to you for you to look at. But as I stated before earlier, everything is with education,
Mm,
understanding what are cap rates, what does that mean, how does that play into the property, loan to value, what does that mean? Most banks will only in this market give you 55% of the value of the property. So if you're buying a property, let's say for $10 million, the bank is only going to give you 5.5 million or $5 million. You have to raise the rest of that money.
difference.
So most people don't play in that space because they don't have the ability to raise that capital, or they do smaller deals. It's the same with the smaller deal. I don't know what's the average purchase price of a single family house there, but where I'm at, it's 650,000 is the medium home pricing, right? You really can't get a
Mm-hmm.
house for less than 650 US dollars. Um, the banks, just depending if it's an investment property, they want you to put up 20%. So they're going to
Okay.
be in 80% of the value. So getting educated and learning all those things are very important. You know, you can find stuff online and you go into those events. Then you can be able to talk right and understand how does investment work, right?
That's interesting. I love the fact that you know your numbers and you know the process behind it. So can you just share like a backstory of one deal that's basically stressed you out, and how were you able to navigate through that stressful deal, and what were your take home lessons, especially the red flags that didn't seem as red flags at the start?
Just one, I have probably 50 of them. There's so many
give me the
deals that
give
will
me
go
the worst
wrong.
of the
So
pack.
yeah, one that comes to mind is a
Yeah.
single family house that I got what's called a pocket listing. That is
Mm,
a realtor. They get a deal, and before it goes on the market, they'll come to you and they go, "Hey, I got this deal before I list it. I know you're a cash buyer. You know, if you're interested, you know, I can bring it to you before I list it on the market." So I said, "Sure, you know, send me the deal." It was $25,000, which was really unheard of at that time because most properties were selling for 160,
okay.
180, 200,000. So they brought me this property for 25,000. I go check it out. The property has good bones on it. You know, some
Mm,
minor foundation stuff, not major. Something that I can get done for like $10,000. But at the time we were buying those type of properties for 160, 180, and then maybe putting 70, 80,000 into them and selling them for close to 400,000. So that's the type of deals we were working with. So I figured, you know, if I got this property for 25,000, it's a home run all the way. So I didn't follow the processes that I usually have because the agent said, "Hey, if you want to close this, the seller wants to close it in 2 weeks. It's only 25,000. You know, they want to be done with it. So before I put it on the market, let me know what you want to do." I went to see it, no problem. I write the check today if they got clean title. So we did the title search. It took about 2 weeks. Title came back clean. I wired the money, closed the deal, but I didn't do an environmental inspection. And come to find out, the company that I use for environmental, I called them after I purchased it. And it happened to be the same company that the previous owner
just
used
honest.
to evaluate to pull a tank out. And there was some serious environmental issues. And it was probably close to 120,000. I don't remember. It was a six-figure
What?
number for remediation. You know, that was a big mistake I made by not following those steps. I guess you know, it was greed that got the best of me. I just said, "Hey, I'm gonna get this property really cheap, and this is gonna be a home run."
Mm,
Yeah, that's mistakes I made doing that. Another mistake I made was buying a property without doing the zoning analysis first. When I really
okay.
started to transition and do new construction, I would buy the house, tear it down, and build. And
Mm.
what I learned over the time is you want to have an architect do a zoning analysis before you close. That should be part of your due diligence clause to see what can you.
What's a zoning analysis? Sorry to cut you short.
So what happens is when you are building a house new,
Okay.
sometimes properties in the US, they have guidelines that they have to follow for building a house new. And you
Okay.
have to have
Well,
um, minimum side yard setbacks. That means the distance from your neighbor's house, right?
okay. Okay.
So, most of these houses have 15 feet or 20 feet worth of space between the next house that's built, and they only allow you to build a house on a certain footprint. So that kind of plays into how big are you going to build the house. The more square footage, the more valuable the house is. So this particular house, I didn't do the zoning analysis and I purchased the property only to find out I couldn't build what I wanted to build to get the value that I wanted to get the value. Right. So I learned that the hard way. So I had to put the house back on the market and sell it at a loss. I wasn't even able to recoup, you know,
Mm.
majority of my money because I had paid expenses to buy it. I paid for due diligence, and then I had to pay the realtor to sell it and closing fees. So, I lost some transaction fees and some stuff like that and wasted a lot of time. I had already
Mm.
paid an architect to start working on plans.
Oh
So
no.
yeah, those things, yeah, those things happen. So
No, that's crazy.
another deal,
And it's an
I can go
interesting
on and
story.
on and on. I'll tell you one last one.
Okay.
This one is important
Yeah.
because this is where a lot of people make mistakes too. So I found a
Mm.
property. It was a 60 unit property. And this is when I first started buying multifamily. And I
Okay.
put the deal on the contract. I put the earnest money down and I went through my due diligence. I didn't put enough time for my due diligence in the contract. I put 30 days where I should have put 60. It took the environmental company, all the evaluations and everything. It took them about 45 days to complete everything. I still was under contract when my due diligence period had expired. And when my due diligence period expired, my deposit was non-refundable. So I actually wound up backing out of the deal because the due diligence didn't work out. And I had
Mm.
to fight with the seller for my deposit. And I was only able to get half my deposit back. So those things you learn.
Yeah. And one would think that, I mean, it's crazy you have these stories and this depth of tiny errors that things you overlooked at first. And one would think that, "Oh, I've done a couple of deals, I'm a pro at this." But even the pros are still, like you said, we learn every day. You keep on learning by doing these deals because
For sure.
you can't basically read up everything online. You can't basically learn everything at once. You have to get the stories by doing yourself. And that way you tend to refine your processes and your operations. So thank you so much for sharing.
Yeah, you have to. What I've learned over the years is you have to be a student of life. You have to always be willing to learn.
Yeah.
Once you close the book, you're finished. You always have to have the book open, ready to receive, ready to learn, and be prepared. You can learn from anyone, essentially. So once you have the
Yeah.
mindset that you know it all, just
Hmm.
close the book. You're done, pretty much.
Yeah. It's when you stop learning, you stop growing. And when you stop growing, you're dying. So we can't stop learning. Yeah.
100%. When you stop learning, you stop growing. When you stop growing, you're dying.
Yeah.
Percent.
So I know you talk about impact investing. That's one of your core principles. So not just in chasing returns, transforming communities with the work you do. Can you give us like an example of how you've seen your investments change lives beyond the balance sheets?
Oh, for sure. So that's what I call complex to community. Most investors, they call this impact investing, where they're going to go to these, underserved neighborhoods and they're going to add value. I think, I don't know if I'm saying this the right way, but I think it's harder to do it if you're not from it. Right. And
Yeah,
I don't
true.
want to take anything away from anybody who is doing something to add value from their heart and they're truly doing it. And they don't lose any credit because it's what count is the attempt that they made. But I think it's
Yeah.
truly hard to do it if you're not from it. Or if you're from it, you understand it a little bit more. So for me, it's complex to community. And what I mean by that is it's not just about making a curb appeal better. It's about changing the dynamics of the property from inside out. So you can have
Mm.
nonprofit organizations come to the property. You can do financial literacy courses. You can do back to school programs. You can do a whole bunch of different things. You can teach people how to do resumes. You can teach people how to qualify for homes. There's so many things that you can have these nonprofit organizations come in and do for free at the facility, like in the function room or something that you have, and start
Yeah.
to change the mindset of the people. And
Mm.
I truly believe that's how you change how you go from complex to community.
I know you've structured your company, LNG Capital Fund, in a way that protects and grows your investor base. What are your non-negotiables that make your fund fundamentally different from others?
Well, I like to connect with investors that have the same values that we have, people who want to make an impact. There's a lot of investors that
Mm.
just, want to get drunk off yield, and there's nothing wrong with that. But we're looking for partners that want to make an impact in these communities, make a decent return, and also,
Mm.
add value. So that's our mission. That's what we stand for. Our goal is to provide quality, affordable housing, whether it's for someone in a luxury arena that we're building for, or whether it's for a low income tenant, quality, affordable housing.
Wow. Thank you. I know the market is shifting today very quickly, especially with the rise of AI and everything in between. How introspectively, how do you see wealth shifting with the market shift? Where do you see wealth being quietly built today? And where
No,
we
I
should
think
start
I
paying
think the
attention?
AI, yeah, I think the AI things that's happening kind of evens the playing field a little bit because it gives an everyday regular person to become a billionaire, right? By using
Mm.
the tools and resources that they have. Like literally, there's no excuse, right? It will build a business. It will do any and everything if you learn how to use it. It all comes back to education, learning how to use it, learning how it benefits you and how it can help you. So I think it's just even the playing field because it's a tool that levels people up and help people get to the next level.
Yeah, and success in your industry means that you're able to see through deals and make decisions very quickly. So, for investors that are watching right now, or entrepreneurs that are basically stuck between the analysis paralysis growth, what's your personal decision making filter that helps you keep moving?
You got to be hungry. I think that,
Mm.
being hungry will push you through anything. Like people who have paralysis of analysis and can't make a decision on what they want to do, they just not hungry enough. They just don't have the desire. It's not even about willpower. It's about being hungry. If you are hungry, you're going to break through any wall. You're going to continue to go. You're going to have drive. You're going to do it. You're going to do it. You're not going to make excuses. Other than that, you just don't want it. It's
I
not
don't
for
want it
you.
enough. Amazing.
It's not for you.
So let's do it little time travel. If you woke up tomorrow without zero properties, nothing in your portfolio, no capital, but you have all your knowledge, all your skills, your network, what's your 90-day action plan to rebuild?
Really is to find the area first where I would want to build my portfolio
Okay.
and start from there and use the network I have and leverage that for the next area network that I'm going to tap into and start
Mm.
building from there. Really, it's utilizing the resources I have and doing due diligence and education in that area. That's what I would do the first 90 days. And then the next 90 days, I would execute. So it's always strategy, plan, and execute in that order.
And a lot of people talk about real estate investing, like, oh, you can just flip houses and make money in the seconds. In the practical facts and in your experience, does it really work that way? Or it just like everything takes time and you have to build that learning curve? Someone needs to make money within the next 2 weeks and it's faced with property investing. What's your advice for that kind of person?
Keep your daytime job. This is not going to happen in 2 weeks. Just like I just mentioned, it's strategy, plan, execution in that order, right? I've never been involved in a deal where I made money in 2 weeks in real estate. I'm not saying it's not possible, but
Yeah.
people who's looking to make quick money, they might as well go to Las Vegas or something or and gamble. But this is something that is not a hustle. This is something that is a business, and you have to take it serious like a business, and you have to be patient, and you have to learn and grow it and put the pieces together. People think it's quick money. Like, why do you want to make quick money? I mean, it's a long-term investment strategy. If you're desperate and you don't have any money, then you have to start from somewhere and do things that will bring you income while you're learning to build this lifetime business.
Okay. Yeah. So you have it, guys. It's not quick money. If you want quick money, go to Las Vegas and probably bet in the casino. So can you break down your strategy? Because when it comes to real estate, a lot of people think of passive income. So can you break down your strategy for creating passive income through real estate?
Yeah, through rentals. If you are doing rentals, then you can generate income. Or if you are investing in someone or become a lender, you can generate passive income. So we offer our
Okay.
capital partners for our buy, fix, and sell projects. We offer our capital partners 12% on their money. It's a 2-year investment. It takes time. The house could be purchased and sold within 12 to 18 months. But we usually lock up their capital for 2 years. They'll earn 12% per year on their money. They invest minimum of 50,000 US dollars with us. And basically, that's how it could be passive. You can invest into an operator like me who's actually boots in the ground doing the work, or you can do it yourself and you can build your own rental portfolio.
So let's zoom out on the big picture and talk about legacy. When people mention Fuquan Bilal decades from now, what's the legacy you hope to speak about, both in business and beyond?
Well, I think for me, as I always say, is legacy is what you leave in people, not for them. I will want people to see
Mm.
my drive, right? I will want people to see my drive and see how tenacious I am and how I just keep going regardless of how relentless I am, and just adapt that attitude, because that's what you're gonna need to be, successful in business. Just that drive, period.
I just wrote it down. Legacy is what you leave in people, not for them. So, Homerun,
100%.
thank you so much. So that takes us to the next segment of the session. It's called the firecracker round. So this is just me hitting you with a bunch of questions and you hitting me right back with the first answer that comes to mind. So are you ready to play the game?
Sure.
Yeah, drum rolls. So if you could text your younger self just 3 words about building wealth, what would it be?
Network, network, network.
Okay, I like that. Network, network, network. Okay. What's the biggest myth in real estate that needs to die today?
You need money to get started.
Oh, okay. So how did people get started? I know networking, but can we just break it down? First timers.
Sure. I mean, it's you can become valuable by giving service, sweat equity.
Mm. Okay, sweat equity. So
You
fill
can
in the
give
blank.
time. You
Sorry.
can give time and partner with somebody by adding value by giving free labor and getting a piece of a deal.
Yeah, that makes sense. That makes a lot of sense. And you only get access to such deals or know about such deals when you network. So networking, giving your sweat equity and having a piece of the pie, then reinvesting that and building your own portfolio. Is it
Correct.
good? So fill in the blank. The biggest risks I ever took was Dash. And I'll do it again because of Dash.
The biggest risk I ever took was leaving my job and getting into real estate. And I'll do it again because of the flexibility it gives me in life.
Wow, nice. So let's talking about flexibility. How do you unwind and relax when you're not so busy chasing deals and
Well,
making money for your investors?
yeah, for me, it's a mixture of it, right? There's this people always talk about work-life balance, and it's a lifestyle business. So if I travel, I'll try to mix it up and do things. But for fun, for me, it's going riding my dirt bike on the trail, going hiking, traveling, reading a book is fun to me. Maybe not to a lot of people. I like learning, so that's pretty much that.
What was your favorite top of the list travel experience?
I would say Europe, going to the island of Capri
Fancy.
in Italy.
Nice. Okay. So can you describe your best and worst investment moment?
I think I did earlier.
Yeah.
I think that
Did
was the
the
worst when I
worst
went through a
one,
few
the
of them.
best? Yeah.
Yeah, yeah. The worst one that I
Yes, the
would
best
say
one.
was the environmental, and the best one I would
Okay.
say maybe this happened a week ago. I did a deal where we closed
Hmm.
and we made close to $1 million on one transaction. So
Wow.
that was
Okay.
week before last, a couple of weeks ago. So that was exciting
Amazing. You're
for the
basically
moment.
blazing the trail and people would want to meet with you. So how can we get you to you? Your website, socials,
Yeah,
how
I'm
can we
on
connect?
Facebook, Instagram, and all of that stuff. You can
Okay.
go to at Fuquan Bilal. You can catch me there. If you are an investor looking to invest passively, you can go to our site and schedule a discovery call. I'd like to learn more
Hmm,
about your investment journey.
amazing. But it's been an amazing time with you, Fuquan. I've learned a lot today. You basically giving us a masterclass of just a portion of your life. You condensed all the years of hard work, grief, learning into this. Gratitude is good attitude, and when you share your time with us, you've shared a bit of your life with us. So I'm grateful that you've shared your time with us on the pod today. So it's my pleasure hosting you.
Thank you for having me. I really appreciate it.
Yeah. And there we have it, guys. Fuquan has basically broken down the walls of real estate investing. So I would make sure I put his the links, show links in the description. So go check him out, book a call with him, and grow your portfolio business. Till I come again next week, this has been Bricks and Banks with Seth. Let's continue to turn knowledge into action and bricks into banks. Till then, this is me signing out.